Morning everyone, let's do a quick tech rundown. I apologize if there's a little bit of noise in the background, but I don't think you'll hear it because this mic's tuned beautifully. So let's do a quick rundown. Now I've got the stocks in front of us and we're still short on the Nasdaq, and now the German 30 again. We've just re-entered right at the top here, and although we've fiddled around for a little bit, I think this extension might just be good for sell. We're well above the trend line and the moving averages, well above the top Bollinger Band. My target is down there, around about 20,800 at the top of the channel, and at least a reversion to the 20-period moving average. Now, we're also short on the Nasdaq. There's some earnings coming out this week, a lot of earnings. We started with Tesla and a couple of the others last night. A little bit disappointing, but Tesla actually rallied in post-market. We're long on Tesla. I'm not sure where we ended up in post-market trading, but we'll find out soon enough. But I think we're bumped up to around about 406, 407. Having closed at 389, so that would be good. And we're also long on Coinbase. That bounced a bit. I think we got some more in aftermarket too. And long on Apple. That looked like it was going to sort of collapse down yesterday, but we rallied up as we had a late market rally across the board. And Apple, after gapping down quite a lot, that just down to the 100-period moving average, closing back above the 20 and edging up into the 50 and this resistance level. It'll be interesting to see if Apple can hold up there today. When it comes to stocks, I'm not really that excited about this current market situation. I pointed this out in the last video. When we look at the Nasdaq, for example, in the broader channels, the green one and the purple one, and the broad channel center line, this dotted blue line here, we're just at around about that level. We are above the 20 and the 50 and the 100-period moving averages. I think it's all pretty much up for grabs still. I did see some articles about big selling, dark pool order activity at the bottom and at the top yesterday. And I also noted that Warren Buffett has moved much more into cash. All of these factors just show that we may just have a topping process going on, but I'm not putting any weight to that really. And I know that the market's generally angling bullish already, and the fear and greed index is poking back up into greed. Nevertheless, I'll stick to my short position on Nasdaq and my long positions on Tesla, Apple, and Coin. Short position on German 32, right at the top here, looking for another go. We did take profit on that last little move down. We got out of that trade and we've now resold higher up. Right, let's have a look at currencies. We're still long on the euro and the pound and short on the dollar yen. Dollar yen's working out. This is the one that normally gives us the most pain. This is the one that's doing the best so far in terms of general dollar weakness. You can see the dollar index is fiddling around, holding above the 50-period moving average, below the 20, so we're trapped in between the two key shorter-term moving averages on the dollar index. I do continue to think that this will move lower as we sort of move into this first quarter of the year, and that should drag up the euro and the pound and drag down the dollar yen. Target for the dollar yen right back down to 150 and then into the 140s, 130s, maybe even the 120s. That could take about a year. With the euro and the pound, I think we're looking at a couple of hundred pips up. It'll all depend on the dollar index and what's happening with the bond yields as well. Dollar index could ostensibly get all the way and quite easily back down to about 105.50. That's this Fibonacci level, and the 100-period moving average, the 200's just below that. So that could take us down about another 200 pips on the dollar index, and therefore another couple of hundred pips up on the euro and the pound, and a couple of hundred down, actually more like 300 down on the dollar yen. That would take us down to, as I said, closer to 150. So that's all that. Now, going across to Bitcoin and metals, we remain long on Bitcoin, Ethereum, and XRP, all getting a bit of a bounce and a bit of a follow through yesterday. But Bitcoin, let's just talk about this one. I'm a big believer in trying to simplify trading, and so if you've got a whole plethora of cryptos available to you, go for the biggest and the best and the most technical and the easiest to trade and the most likely to catch a bid when there's optimism about crypto, and that's Bitcoin. Now, Bitcoin still has to close above 106 in order to make further progress, and we're still not there yet, but we are trying. We've had 3 days of higher highs and higher lows now, so that's looking okay, and I think Ethereum and XRP will follow suit. We've got long positions on Ethereum, slightly out of the money on that, well into the money on Bitcoin, getting in at around 90,000, and we got in at just above $2 on XRP. We're now trading at $3.11. We're now long on gold. We just exited gold on that pullback, as you will have seen from one of the last videos, and we're long on silver again. Just entered those positions this morning on this consolidation below the recent all-time high. Looking quite supportive, really. We got out on that breakdown through the support level there on gold. taking some profit. We got in long much lower down. I can now move that one up to where we are currently, and we got in long just earlier today. Same sort of thing on silver, that trade that we took earlier, that one there, we actually got out of that one when we dipped down below that support, took a tiny loss on silver, but we're now back in at long. My target for silver remains $60, whether you like that or not, and don't put your snarky comments up on this channel again. If you don't like $60, that's okay. I don't mind. Right, and then as far as platinum and palladium go, we've got this on one chart now just to make it easier because I've run out of space on this page. So the red and the green candles are platinum and the black candles are palladium, all on the same chart. The platinum scale is on the left-hand side, palladium scale on the right-hand side, and they're both just curling up underneath that potential cup and handle pattern, which I had drawn on my charts previously. So let me just draw that in for you again, something like this. And once again, I'm drawing with my mouse pad. That's not a bad effort. So cup and handle on both platinum and palladium, not very neat, pretty messy, but nevertheless, there you go. Let's get rid of those pictures. So zooming back into these charts, you can see these are trading in a pretty similar sort of fashion, following almost the same shape. If one goes, perhaps the other one will go too. So that's both platinum and palladium. We're long on both of those. Let's go across to natural gas. I did put a tweet up on X. I think they're called posts now. This is a 4-hour chart at Black Bull showing the Henry Hub price from the NYMEX, and you can see we've just rallied up. That's where we got in on a long trade. I did put this up on X as well, and we pointed this out in yesterday's video, and just moving up higher now. This is a 4-hour chart, and you can see even though we've had quite a nice rally, we had a big spike on the last 4-hour candle. We just rolled over into this one now, and so we do want to see that being negated and this price to move up. We've got the storage report coming up later on today. We'll have to see what that's got to say about all of this. But we've got plenty of space above us. And I kind of like this area here at around about 3.5 to 3.6, where the 200 and the 50 period moving averages are in confluence. And it's also, as you'll see, a Fibonacci retracement level from this last swing high, just about on top of that level there at around about those moving averages. So just around about 3.5, 3.6, maybe slightly higher. There's also an order block just above there at where the 100 period moving average is, and that's at around 3.75. Another very key level that you'll know that we've been watching for quite a long time, a couple of years now together. So that's natural gas, we're long. So somewhere between 3.5 and 3.75 is the target. We're also long on the continuous price here. This middle chart, this is over at Pepperstone. I've got two tranches on this one from up there, one from down there. You can have a look at the prices on your own chart. We're also long on uranium, both on URA and UEC. After that big sell-off with the deep streak, whatever it's called, Chinese AI, seeming to indicate that we don't need much electricity anymore, of course, which is not true. I think electricity demand is going to carry on growing, as is the interest in nuclear and therefore uranium as a fuel. So we're going to keep long on those. We unfortunately dipped back down towards our entry levels, but we're still in some profit on those. The 10-year yield's interesting. Having a look at this chart here, we've got a potential head and shoulders. I put this up on X as well, and I did caveat this with saying that most of the time head and shoulders or potential head and shoulders patterns don't actually work out, and quite possibly we'll just bounce off here, negate the right hand shoulder and move higher. I don't think so, but simply because we've broken down through the first trend line, we've got another trend line that we're retesting now, and the crucial 50 period moving average. If we do break that trend line and complete the head and shoulders pattern, we should get down to at least 4.31 and more likely 4.15, this big swing low down here, which is also a Fibonacci retracement level, as you can see from the left-hand side over here. And I think that's it, folks. We have nothing on VIX, nothing on the Rand against the ZAR. TLT we're long on if this 10-year yield keeps moving down. TLT should gap up a little bit again today. And then going across to softs and grains, we've now hedged our coffee position, fully hedged it. So we got short there, and on the close above about 350, we immediately hedged the entire lot. So we'll wait to see what's happening with coffee. If this keeps moving higher, we'll just hold on to our hedge. And if we move back down to our hedging level at around 350, we'll consider unhedging that. We've still got nothing on corn. I'm waiting for cocoa to open to potentially, actually, form this island reversal still, because we still haven't really broken out of that. So if we gap down on coffee today, I will consider and form this island reversal. I'll consider unhedging, or at least partially unhedging, some of my coffee shorts. We're long on sugar, we're long on soybeans. You can have a look at those charts yourselves. You can see our entry positions from there. I'll move my face away from the soybeans so you can have a look at that entry level. And I think that's it, folks. I'm just going to scan back to the beginning quickly to see if anything's changed, which it hasn't. And just looking across here, NASDAQ will be super interesting. Can we close higher today? We'll see. Same with the German 30. I know a lot of people are looking at shorts here, maybe too many, so we may have to push and squeeze higher on that. I'll hedge that if necessary. And then the metals, Bitcoin and the metals, still looking okay. Bitcoin got to get through 106,000. And as I said, we're now freshly long on gold and on silver. Platinum, palladium still turning up quite nicely. And that's about it. And then natural gas, as I said, we want to really hold above that sort of ledge that we've just formed here. Let's zoom in a little bit. This is the 4-hour chart. We've got a ledge forming underneath us there. And ideally, in an ideal and beautiful world, we'll hold above that black line and not break below there and use that as a launch pad to move on even higher. I did forget to mention we're short on WTI oil as well. And there's our entry, our last entry position at the top of the channel. Target for WTI oil is the bottom of the channel. That'll take us down into the high to mid 50s. I'll just draw an imaginary line on there for you to have a look at. Something like that. Perhaps a bounce back up to the underside of that ledge. And then a continuation, something like that. Let's make that red so that it makes sense. So that's the sort of thing I'm looking for on oil. And we're short from the top of the channel and that big order block. We've broken down through the 200 period moving average. We're also down through the 20, but we still have the 50 and the 100 beneath us. Those are strong support levels. Well, I hope you enjoyed that, folks. If you have any questions or anything you'd like to ask, please put it up in the comments section below the video. And there's a whole bunch of links below the video as well if you want to have a look at my private group offer and my courses. And if you don't want to do any of that, please at least just subscribe to the channel and give it a thumbs up. And I'll see you in the next video. Take care. Good luck with your trading today. It's going to be an interesting one. Remember, the natural gas storage report comes out later today too.
Trade all day. Wake up, coffee hot, laptops humming, Dow Jones jamming, NASDAQ's drumming. I'm riding that trend, watching it climb, snatching them pips in rhythm and rhyme. Mad cross, RSA tight. This funk don't stop, it's a trader's delight. Scalping those ticks, riding that wave. Pip by pip, we're digging the grave.
Funky pips, stacking high, moving with the charts, touch the sky. Breakout beats, trendline flow.